Live, and once again, we're live. Good morning to everybody, and welcome to your show, Behind the Markets. This is where you get your daily dose of market roundups, analytics, stories, and even some thought provoking things to help you in your portfolio development and your business. Today is Enterprise Thursday, where we're going to be talking about Startup Nation. We're going to be talking about business side of things in the main point. Vernon, I want to talk about how to get a product onto the market. The sales part of it. It's pretty much a tricky game, eh? It actually is one of the most tricky games, but it is part of the game, and is the most important part of the game. I remember meeting up with an entrepreneur who said there is no business open if there are no sales coming through. So that's something that we all have to think about. But today, there's a lot of big market moving news that I want to quickly share today. Vernon, how are you doing, my brother, and how's your day going?
We're doing fantastic, actually. We're great for a beautiful period like June. I think it's lovely. The country is now bouncing, in the ambience of a reduction of fuel pump prices. Oh, we're good. We're doing great.
Just a note to anybody who's watching, or if you got a comment, does Vernon not sound like an airplane pilot? Like just the way he sounded there, that just sounded like the pilot giving a message, like when they're about to take off. Just give me a comment if you agree with that. All right, people, let's get started today. As we kick off on Enterprise Thursday, it is the 30. It is the 1st of June 2023. Happy new month to everyone. The end of this month will be the midpoint. This is where you assess how have I done in my financial goals? How have I done in my health goals? How am I doing so far? You've got another half of the year remaining. Don't wallow in what you haven't done. Think about how many months you've got left and push what you can do. Okay, that is what we want to try and get everybody to try and do. If you're behind on the 52-week money challenge, by all means, start to catch up. Go for it. Go for it, and keep going for it. Right. So let's get down to the market roundup today. What are we seeing today? We are seeing that the Kwacha is continuing its downward trend. 28 days down 0.36% up on the dollar, 1.67% up on 7 days, and 9.62% in the last 30 days, up almost 8% year to date. That's where the dollar is. Remember, it did dip for a bit and then came back down. So we do have seeing the dollar in a buying pattern at the moment. Stock market has broken to new all-time highs yesterday due to some movements in some of the major stocks yesterday. We did see Airtel move up yesterday. Actually, that was the only one moved up quite a hefty chunk. And we have seen that the stock market is up 0.65% yesterday, but up at 12.32% year to date. So it is having a relatively strong year. It's just unfortunately, it's got a currency that's moving the other way on it. So in dollars, the stock market is just slightly positive. That's the only problem. In dollars, it's only slightly positive, but it's still struggling as well. And we did see the bond market move up about 0.1% and negative 0.07%. But remember, you are an investor in Kwacha. There's this thing about people always trying to keep portfolios in dollars. You are not living in the USA. You are living in Zambia. So you spend in Kwacha. Just one quick piece of advice I always tell people: your assets must be in at least 80% of the liability. Okay, whatever the currency you're going to spend that liability in, your assets should be about 80% of that. The reason is you want to try and limit your FX risk, because a lot of people hold things in dollars, and then when the dollar gets weak because the government has maybe pushed something, a debt deal goes through, they get wiped out horribly. So try and limit your FX exposure. If you've got a dollar based liability, then by all means. But if you've got Kwacha based liabilities, do not try and speculate on the dollar. You're working against the central bank and the government, and you don't have the firepower to survive that fight. Now, next thing that we're also seeing that the rand was up 0.16% yesterday, down 1.45% on the week, but still down 7.41% year to date, while the dollar's up 7.92% year to date. You are seeing the rand and the dollar starting to decelerate a little bit, losing a bit of steam, but they're both still in an upwards trajectory. The rand seems to be limited by this one Kwacha point, especially now that South Africa seems to be deciding that they want to keep Putin in their backyard. And that is a little bit of a dicey issue for them as they're having their BRICS conference. Other thing that we're seeing right now is on the other side here, we're seeing that our bond market year to date is up 11.33% on the secondary market. This is not primary market, secondary market. So we are seeing that yields are a bit lower on the secondary market than they are naturally on the primary market. So we are still seeing that those who are going into the auctions are getting probably a better yield as they're going in. But remember that you go into the secondary market for convenience. One of the reasons I've got clients, I always tell them go into the secondary market if they can. Why I would advise a client to go into the secondary market is only when they're worried that the money that is sitting in their account is money that they'll chew. Okay, that's what they're worried about, that they're just going to chew that money. So the best thing they can do is start buying assets with it, and they need to buy it as quickly as possible because money always finds a place to go. My dad always used to tell me that. He said, "My son, money always finds a place to go. Don't ever stress about that. It always knows how to find itself accommodation. It's the one thing that gets accepted wherever it wants to go, and it always knows where it wants to go." Another friend of mine used to say, if you don't have a millionaire mindset, money will leave you for a millionaire. It's a very fickle mistress. Very, very fickle mistress. It wants to only stay with millionaires. So if it finds itself in the hands of a non-millionaire upstairs, it'll find itself out of those hands and back into the hands of a millionaire. That is how money works. But anyway, we have seen that the bond market internationally in US dollars is down 0.07% because of the losses on the currency, only up 3.1% year to date. So all the ones who are investing abroad, the Zambians who are living abroad trying to invest in their portfolios, depending on how you want to spend your money. But if you're a Zambian who's trying to hedge your bets and you're not sure whether you'll be returning back, remember what we always say, it's a mix between property and bonds. That's kind of your mix of your portfolio for you as a Zambian living abroad. That is one of your best games. But always use the currency as a barometer as to which one to go harder into, but buy both. Right. The other thing that we're seeing as we saw, interest rates are still there. Brent crude down 0.14. Copper down 0.14% on weak China data. Everybody's concerned about weak Chinese manufacturing data, and that is actually concerning the majority of the market. And we saw that, and we're seeing that in copper prices down 0.14%. We're also seeing crude down 1.76%. So this is some more good signs for us. If we keep seeing crude coming down like this, we'll keep seeing some more fuel. We might keep seeing some more fuel reductions, as the news was yesterday. I'm going to analyze the fuel reduction for you. And we're also seeing that gold was up 0.35% as we're getting into the vote for as we're getting into the main vote that America is going through for the debt ceiling. Remember that they were going through they were going through the main vote for the debt ceiling in the House of Representatives. Speaker McCarthy was really positive that he could get it through, and he did already have a little bit of a margin. And the news has actually come out. House overwhelmingly passes the debt ceiling bill. So they are kicking the can down. Remember that the House of Representatives is where budgetary matters are dealt with. BBC is reporting that the measure easily passed the chamber by a vote of 314 to 117. So some people are fighting it, despite some defections on both sides of the aisle. It was the extremist wings of the Republican Party and the Democrat Party who were not comfortable with the debt ceiling. So you could see that's what was pulling them apart. And therefore, that will be some of the news that's actually, that might pull back gold just a little bit. The Senate must vote on the bill later this week before President Biden can sign it into law. The government is forecast to hit its borrowing limit by Monday, June 5th. This has left little margin for error as lawmakers race to avoid the U.S. defaulting on $31.4 trillion of debt, which underpins the global financial system. No, people, I didn't say million. I didn't say billion. I said trillion. Okay, and on Wednesday evening, 165 Democrats joined 149 Republicans approving the 99-page bill to raise the debt ceiling, allowing it to pass through the House by a simple majority. What's interesting about this bill, though, is that Speaker McCarthy had to basically side with the Democrats to get this, because more Democrats voted for it than Republicans. That should be of worry to him, because remember, the House of Representatives is more Republican than Democrat. So they did have defectors on both sides who thought it doesn't do much for spending, while on the Democrat side, while the Republicans thought it doesn't do much. It does too much to spending, and there's too much spend. There was Republican Representative Chip Roy who was fighting all of this. Now, this is big news because this frees up the financial system. That's the most important thing. It frees up the financial system. which can actually which now actually puts a bit more hope in even us, even the financial system now trickling into Zambia, if we can sort out our debt issues by the end of this month. Now, in terms of our wealth insurance assets, we did see cryptocurrency down 2%, Ethereum down 1.6%, while gold in Kwacha was up 7.2%. Despite the dollar getting stronger, these currencies got a little bit weaker, and that's why I keep telling you, look at that volatility, 2% loss in a day. So you have to be very careful about putting a lot of your money into these things because they are highly volatile. I keep telling people this. Bitcoin itself is volatile. The dollar on top of it is volatile. So there's two volatilities that you're trading through. That's why even gold can be a little bit volatile. So you don't want to hold too much of it. You just want to have enough of it. So now let's look at our broad market here. 76% upwards year to date in terms of the green bar being the nominal. 76% upward year to date in terms of Bitcoin. 67.9. Ethereum highly volatile. 17.3% gold is leading the way as we're still in a defensive position with dollars up 8%. 12.3%. The stock market has actually started to come back. Remember, it was in negative territory for the whole of the first quarter. And in the second quarter, the stock market has come back to 12%. It's had a very strong session. While you've seen bonds up 11.3%, they were also at a very meager point as well. So we're seeing both of the mainstream assets are doing relatively strong. And this is where we're standing. Considerably. Now we are, and I will answer some of these questions before. Now, this is where we were in terms of oil. We did see a bigger movement, and I will give you how the story is looking. Let's take a look at some of the things that have happened on the market as we slow down yesterday. Italian inflation declines back below 8%. German national and import inflation also declines, while Ugandan inflation drops for the fifth month in a row. It sees a fifth drop in a row, down to 6.2%, while U.S. crude stocks actually rose. That actually pushed oil prices down. Kenya did reverse course and inflation did rise back above 8%. So we are seeing a little bit of a tiff here, but generally inflation news is showing it downwards. Mortgages in America rose by 0.22% to 6.91%. Debt ceiling battles are obviously scaring a lot of the interest rate market. Japanese household confidence was actually up. Italian GDP was up, while the Canadian GDP also rose, and U.S. job openings went back up above 10 million. There are 10 million job openings in America with only 5 million people looking for work. That is what you call spoiled for choice. While in Zambia, there are probably less than 10,000 job openings with 5 million people looking for work. It's that wild this side. Other news that we're also seeing is that industrial Japanese construction orders were up 19.9%, up from negative territory up to 16.2%. Japanese housing starts were down, unfortunately, 8.7%. They went into negative territory, while mortgage data did show that the American mortgage industry is actually slowing down. So growth side is tender, inflation side is slowing down. Interest rates are caught between weak growth, sticky inflation, and worries of the debt ceiling in America. We're still not out the woods, but we're just taking a step closer to salvation. Okay, so that's one of the major stories that we're actually seeing today. In terms of main stories that we are seeing on the markets, we did see obviously the ERB announce a record pump price drop on the heels of international oil price declines. We did see that S&P projects sees weaker 2023 growth in the 8 sub-Saharan main economies. In 8 sub-Saharan key economies. We did see that copper is down 0.7% and is actually scheduled for and lost 6% in the month of May. Obviously, as Chinese manufacturing data shrunk for a second consecutive month, gold is actually maybe seeing as we're worrying about a debt default. Gold is still trading high, while Chinese manufacturing sector is an important regional growth driver. It shrank for a second month, and that is pushing oil prices also down. Now, one of the main things we're also seeing in America is also that the U.S. retail sector continues to feel the weight of inflation. So one of the problems you're seeing is because of high costs, a lot of consumers are getting to the till and they're being very selective about their discretionary versus essential items. It's hard to pick between that new Rolex and eggs. That's a hard decision to make. So the reality is that they are now leaning more towards essentials, and you're seeing a lot of the discretionary products are struggling. That's why the XRT retail index is actually struggling in America as well. While one of the big news that's happening in the crypto space is Tether, the stable coin, expands its reach into the country of Georgia to invest in something called CityPay.io, which is going to partner with 600 locations to help deal with payments in hotels such as Radisson, Wendy's. So these international branches allowing people who are maybe tourists to actually come in there and pay using Tether or using a Tether-based system. UAE also unveils its cryptocurrency anti-money laundering guidelines, which is supposed to take effect in June. So they're actually taking effect very soon. So they're actually ahead of the curve in dealing in cryptocurrency. So that's some of the major stories coming out of the markets today. Now let's deep dive into some main stories that came out yesterday. Big story yesterday: ERB announces one of the largest price drops in since we've started the monthly reviews. Energy Regulation Board announced the month-end 2023 price drop of 11.24% and 11.38% in diesel and petrol, okay, respectively. Now, this is the largest drop in diesel that we've seen on record since the monthly price reviews, and the second largest drop in petrol, second to August 2022. So we've actually been seeing this a very huge price drop that happened. The reduction was mainly driven by global prices of petrol down 11.99% and 11.05% down from diesel, respectively, due to recession fears and weak Q1 Chinese data. Okay. So let's take a look at even what's been happening on the charts itself. Here's been the trends of oil. Yes, people, I love graphs. I love numbers. Let's get over it. I always have numbers for these things. So as you can see, the green line that's been moving there, that's your petrol price. And the blue line is your diesel price. And the blue line is your petrol price. Now, one of the things you're seeing here is that your petrol prices, as your diesel prices started to decline in March 2023. Remember, this was when we opened up the pump, the direct pump that was coming through the line. So we're actually now starting to get the direct feed of diesel coming through the pipeline. Now, remember, that did leak last month, but we have seen a record drop down to 21.87. So it does mean global prices are now starting to reflect, and the structural change is now having a bigger impact. This is the lowest diesel price that we've seen since March 2022. Okay, so we've actually have the lowest diesel prices since about the time we started these monthly reviews. Just a few months afterwards, that's when we had huge diesel jump ups, and then now we're back to 21.87. Now we've also seen petrol also drop down, and this isn't the lowest petrol price. Lowest was in September, but as you can see, the lowest petrol price that it is one of the lowest petrol prices that we have since January. So it is competing with the January price, which was 24.49. Actually, it's a bit lower. So this is the lowest petrol price, for the year that we've had. It had escalated. Now, one of the key things we need to take a look at with this is that petrol prices and diesel prices, especially diesel prices, have a strong correlation with transport inflation. Okay, so there's about a 76% correlation between petrol prices of this month, and they lag. Okay, so transportation costs are about 2 months behind the petrol and specifically the diesel price. Okay, so diesel is a strong controller of transport prices because most commercial transporters use diesel vehicles. Okay, so what you're seeing is that the deflation of transport costs is 2 months behind. So this price drop is going to take effect another 2 months later. So we are expecting transportation costs to continue declining. Okay, meaning that should reflect in much slower inflation, because the two key drivers of inflation for the last year have been food prices and transport costs. Those have been the key movers of inflation. Food prices are flat at the moment, okay, because global prices of food are starting to come down. We seem to be controlling the export market. So food prices have remained flat, though vegetable prices and fish prices are the ones which are going up. But transport prices are scheduled for at least 2 more months of deflation because of the price drops that we're seeing in diesel. So that means that the inflation figures are probably likely to stay below the 9%, below the 10% mark, probably for the next 2 months. Okay, meaning that also remember that July, August, September, going into this period, June, July, August, September is what we call the inflation valley. So the inflation hill is where inflation rates are going up. Those are usually the first 4 months of the year, and the last 2 months. The middle 6 are where you'll find that there's actually food deflation because there's a lot of food supply that hits the market. Now, I don't think we've had a great harvest, but we've had a decent enough one that we can control food prices. So what we are probably likely to see is a flattening of food prices and a lowering of transport prices, which is probably scheduled to slow down inflation. So it just means that we're probably going to see slow down inflation, and diesel is the key driver. Remember that diesel also has a strong effect on even petrol prices, because cheap diesel means we can get petrol in cheaper. Okay, because the trucks that bring petrol in run off what, people? Diesel. Okay, so that's the main thing that we have to pay attention to. So this price drop actually cuts across many parts of the economy, and it actually does affect. Now, can it be sustained? This is another story. So let's take a look at where the global economy is scheduled for. Now, this is the outlook that was published by S&P. Now, on one hand, there's the expectation that the Chinese economy will recover quite strongly in the second half of the year. If you start to see strong Chinese economic data, you're likely to see strong oil demand. And that being the case, we might see record oil demand of 102 million barrels per day. You can see that that is meant to be a record that hits in quarter 2. If we see that, that means quarter 2 will find ourselves in quarter 3 will find ourselves in an oil deficit. And that is likely to push oil prices back to the projected levels of 87. The projected end of this year is meant average of this year is meant to be 87 on Brent. So that means there is a race against time before the third quarter for this country to sort out its exchange rate and sort out its bond market and sort out its debt. That is the main thing that has to happen, or else what happens that if China recovers. Now, there's also worries that will China recover? It appears the service sector of China has recovered, but the manufacturing sector is struggling to get back into recovery. So even with data showing some sorts of recovery, the infrastructure is not too well. Fixed asset purchases are not doing too well. The construction industry is still slow. So there's some fragilities in the Chinese economy that may actually be doing with the aging of China. So China may not bounce back oil prices. It is 50-50, but the wisest thing for this nation is to get a handle on its oil, on its exchange rate, by getting these creditor meetings. Now, these official creditor meetings, and I think there was a question that was raised here by Malunga Jerome, who's saying that the official creditor committee are meeting today. What are your expectations? I expect that it will just be kicked down the road. This doesn't. We're not seeing any signs between America and China of reaching a resolution here. I'll be surprised if we get some sort of resolution today. I'm being honest with you. I'll be honestly surprised. I don't see this panning out today. Though I do think that this thing has just now become stuck. That's where the problem is starting to play out. I think the geopolitics of the US and China is now playing out really strong in our debt, and it is causing a bit of a problem. So until we can see these two reach a full strong resolution. Now, President Macron has made promises that this will be sorted out before June 30th. This has been talked about by the World Bank. This has been talked about by Janet Yellen. Every single person has come down the mountain telling us that Jesus is on the way. But unfortunately, this is not working at the moment. Now, I don't know what it's going to take, but we seem to have reached a gridlock. So it probably will solve itself eventually, because I think there's only so long that the Chinese and the Americans can be at it without damaging their portfolio. Because even China does not want to damage its Africa portfolio. But there are no signals that we're reaching deal day today. This is a drawn out issue. Then the other thing you need to bear in mind is once you finish with the official creditors, then you've got to start dealing with your Euro bond holders individually now, because those people have got different agendas here. They're in the middle of a debt crisis in America. They've got 5% yields on their treasury bills. They're not really into cutting deals at the moment with African nations. Okay, they're not. They do have an appetite to put cash in your economy, but right now they've gotten used to the idea that they're getting 3 to 4% interest rates on 10 years, and they're also getting about 5% on the shorter end due to recession fears. So you still do have a high interest environment globally, such that even if your creditors have met, it's a different story. Remember when these IMF negotiations started, we had the America was dealing with almost negative interest rates. So they were willing to come into Zambia and just deal. Right now, they're getting very strong positive interest rates. They're not that willing to come into Zambia, okay, and start cleaning up the mess. So I think it's not as cut and dry. And the other thing you need to recognize is it's those private creditors who are affecting your rating. Because once those private creditors finally get unwound and everything is fixed there, then the ratings agency can re-rate your government bonds. Then the international banks can then put their international portfolios back in Zambia and start buying up bonds again and holding Zambian bonds again. That is what fixes your currency. So this is level one. Then there's about two hurdles we have to jump after that before we can start to feel the positive effects of the market being helped. This is not an overnight journey. Most people have to just buckle up and start getting ready to start doing things the hard way, slogging it through. You're managing to grow as an economy at 4%, even with this tough environment. Just keep it up. I think this tough environment is teaching Zambians to be resilient, such that when the environment gets better, guess what? I think we can even grow stronger. So I think, you know what? Embrace it. Embrace the toughness that we're going through. So on the other hand, there is this gamble here. So on the second half of the year, can we sustain the low diesel prices? Well, there is that secondary part. Remember that 10 to 20% of the value of petrol is supposed to be the blending. We haven't gotten news about the blending project either, which is supposed to get started with companies like Zambia Sugar, Sunbird Energy, and possibly any others who can now bring ethanol production into the fuel blending. So that might be something interesting, but unfortunately it's been spoken of, but we haven't seen the progress on it yet. We'd like to keep seeing what's happening there. Other news that came out yesterday, just as some main news, is oil and copper down on weak Chinese data. S&P forecasted. Sorry, That's a bit of a wrong. That's a bit of a wrong one there. And we did unfortunately get a wrong one there. We did see that U.S. lithium ion. U.S. lithium ion battery imports smashed records in Q1 2023. Sorry about that error, people. Q1 2023 U.S. lithium ion battery imports jumped by 66% from a year ago to 235,000 metric tons of lithium ion batteries, and 24% above the previous record of quarter 4 2022. 87% of these imports are coming from China as the main source. However, a fleet of multi-billion-dollar lithium ion battery factories are under construction to leverage the US's tax incentives in a bid to domesticate this. So America is relying too much on China for this. This is good news still for Zambia because this is copper demand. Okay, lithium ion factories being built, high imports. This means that future copper demand is being driven by these EV batteries, which are growing. As you can see, here's the chart that shows it. Take a look at the growth that we've seen from 2018 all the way up. We've gone from just about 10,000 metric tons of lithium ion batteries to 250,000 just in a quarter. Look at the change over the last 5 years. So that shows you what this is going to do for copper demand. Even with a weak Chinese infrastructure market, look at how copper can still remain above 8,000 because of the EV market. So the EV market is only getting started. Remember, this is only about 10% of car production in electric vehicles. We're waiting till we get to about 50%. So remember, the EV market has got about 5x room to about 6x room still to grow in the next 10 years, and we're still seeing this level of impact. So this is what we mean. Now remember, Zambia is planning on also trying to make batteries as well with DRC. That's something that the US has promised to try and help us value add our copper and our cobalt to start doing battery production domestically. As you can see here, for America, the number one source is China. 87.9% is coming from China. The next one is South Korea, 3.2%. Panasonic is one of the major ones. Japan, 1.2%. And then you're also seeing Poland, 3.1%. Hungary, 2%. That's where you're seeing the bulk of batteries. Here's the story that was meant to be there. Sorry about that. S&P sees weaker oil growth in 8 key African economies. S&P said that it is now forecasted sub-Saharan African economies, its tracks, would only grow 2.9%, down from the 3.4%. Policymakers are struggling between high inflation and debt management and high interest rates. There is a battle that they're having to try and grow their economies. However, the reopening of tourism and service sectors and falling food prices should offer some relief to some of the sub-Saharan economies. Now, Vernon, before we get down to it, let's talk about our chart of the day. Now, I did talk about the bond auctions yesterday and what we call the rejection rates. Here's the historic outlook over the last 12 months of how much in terms of bond bids have been rejected. Okay, So, in other words, you could see that when the government was having surplus of bond interest, people were actually buying up a lot of government bonds, let's say around 2022. You could see the long ended bonds have been the ones which have been getting high levels of rejection in September, November, December, and February at most. But if you're looking going forward, there are lower levels of rejection, but the government is still rejecting bids. So the fact that they're still rejecting bids means that interest rates are not likely to move. Now, the average rejection rate is around 12%, and we're only about 9%, meaning the rejection rates are starting to come down below the average over the last 12 months. So that's some of the data that we're looking at. And if you're looking at bond auctions, I was saying that that was one of the worst bond auctions that we saw. If you take a look at the last one, this is the worst one that we've seen since December 2020, 390 million kwacha versus 310 million kwacha. That was back in December 2020. Other bond auctions have all been much stronger in terms of the cost sales that they've issued. So the government is struggling to raise capital through the bond market. And what this is saying is that even in the face of poor auctions, they're still rejecting bids that are too high, meaning this is the sign of fiscal prudence. So they are sticking to fiscal prudence no matter what, even if it means freezing projects and all sorts of other behaviors. So before we get into our topic of discussion, let's go through one of the questions I think we picked up here from Wix Muluba, who has asked, if and the question here is, if one has got an unpaid student loan, can the loan board still come for money which is in assets such as unit trusts, bonds, and treasury bills? Um, well, the loans board currently uses means such as getting payments from your. They do get it from payments such as your your salary. So it's a salary deductible point. So they go to your employer and they start getting it. However, this is an actual loan, so it can default like any loan. And remember that you're dealing with an authority who has powers to get your assets. Now, I don't think anybody has gotten to that point yet where they start seizing assets for this, because remember, this loan is a new thing. You're given 10 years to pay for it. So there's still quite a lot of leeway, and it's a government thing. Nobody wants to be seen as the people now collecting loans, collecting student loans with knives and guns, and effectively they don't want to look like that. It's a bad PR thing to the government. But do they have the powers to do that? Yes, it is a loan to the government. They have the powers to do that. And in fact, if you're holding anything, they can find you. So if anything, it's like owing the city council. They can obtain their money by any means necessary and use any judicial powers that are rendered to them. So remember, you are dealing with the government, but we have not dealt with this situation yet. My advice is just pay the student loan, because they will find a way to get it from you. It's the government. They can get it from your bank account. They can get it from anywhere. They will find a way to get it from you. So you don't really want to. It's like owing taxes. Let me put it to you this way: it's like owing there. They will find you. Okay. All right. I think that's one of the main things. And Vernon, it is actually sounding that many do believe you do sound like a pilot. You do sound like an airline pilot. So, in the spirit of today's conversation, in Enterprise on Enterprise Thursday, I want to continue this conversation we've been having on building this business pyramid. So I've given you two pyramid models. There's one for building your wealth pyramid, which is what we're currently going through on the financial side. But there's building your business pyramid. This is your growth pyramid, kind of how you build it up and the phases that you will go through. This is a model that I'd worked through extensively, and this is pretty much what I've even taken myself through. So we're at the point, Vernon, where a person has solved a problem. Last time we talked about problem solution fit. Okay, you've solved your problem. Now, how do we get to market? How do we get this solution that we've solved a problem to? Okay, we've maybe found a product on the market that's defective. We found something. And the key to this is the more Zambians can look and solve problems, the next phase where people now start becoming too aggressive on looking for capital is they struggle on how to go to market. Okay, one of the biggest problems we face is how to go to market. And a lot of people have got problems in sales skills and how to refine their product so that they can get problem solution fit. So you can get product market fit. So you've created a solution. How do you turn a solution into a product is to make it fit a market. Okay, because now it's a product. Once it has a market, it's a product. Once it has a problem, it's a solution. So the transition from a solution to a product is about making sure it fits a market that demands it. Okay, so whatever you're doing, whatever product you're selling, whatever service, whatever, okay, it is all about making sure you have a market. Okay, so now let's talk about this next phase. So stage 1A is simply about coming up with a minimum viable product. We talked about that. Going through the problem solution fit canvas. People, I gave you the link to it. Go to the show previously, you'll find it there. Let's now talk about coming up with selling a product and developing cash flow. So that's in your bottom level, stage 1A. Okay. I don't know if this is visible to you as well, Vernon. Just give me a thumbs up. Stage 1A there. And I'm looking at compliance, not really compliance, but sales and cash flow. How to generate that so that you can get this core task, and how to then transcend to 1B, which is creating a business model, creating product market fit, and making yourself operationally efficient. Okay, so right now you're just focusing on making your product. That's what you're focusing on. You're making your product and selling your product. That's all you're doing. So, at the end of the day, a business is just about making a product and selling it. That's it. Creating a service and selling it. That is what you do. On top of it, all this accounts department, HR department, all these laws, policies, all that stuff, that is fluff. Your business does not exist unless you are making something and selling it. Money FM does not exist unless we're creating shows and selling ad space. That is it. Okay. Unless we're creating shows and selling ad space or selling content or selling things, unless we're creating and selling things, it is just a building that is a liability. It is not a cash generating asset until it's able to sell something. So this is what we need to start looking at, how to sell something. So today I want to talk about Alex Catoni's 6 P's of persuasive messaging, because people do have a problem with persuasive messaging, how to actually sell. So there's a book called there's another book. There are 2 books you should read to help you with this and help implement this in your marketing messaging. I have talked about the classical Dale Carnegie's How to Win Friends and Influence People. Brilliant read. I've gone through it. Oh, it's a brilliant read. The other thing I'll tell you is Robert Cialdini's influence, the psychology of persuasion, and even I think Susan Mulongotti's done a good job with her sales books as well. These things help us in actually pushing the agenda of actually getting your sales messaging. So look through these as well to help you refine your messaging. But Alex Catoni is another resource that I've also used, and this is a model she actually came. And I'm not in the habit of just using someone else's model and not naming them. I know people just do that in this country where they just grab someone's content and they decide not to name the person. I am in the habit of referencing the people who I utilize their work. So here's what she pins down to help us in the act of writing persuasive messaging. The first thing you want to start with, this is called the empathy part. It's in 2 sections of 3. This is called the empathy model. So all of you can really want to take this down if you're trying to build on what you want to do. This first part is the empathy part. If you're an entrepreneur and you're looking at how to sell your product, a lot of us will come to our customer with a product and say, here, this thing does, hey. Slow down. Slow down. Okay. So the first thing you want to do, and in fact, I want to just quickly zone out of this for a second. Before you even start your messaging, especially if you're dealing with a high level product, um, there's a guy named Dan Loke who says there's 5 questions you want to ask anyone. One, why did you reach out to me? What was going on with you emotionally and in your life that led you to reach out to me? He says, first, you need to try and get people to reach out to you. Because once they reach out to you, there's an incentive that you need to understand what behavior and situation in their life brought them to you. The second thing you need to ask is, what problem are they trying to solve? The third problem is, where are they? Where are they and where do they want to get to? The fourth question you want to ask them is, what has been the barriers between getting to where you want to get to? And fifth question you want to ask is, how will you feel if you achieve what you want to achieve? Once you've gleaned those 5 questions out of a customer, you can now wrap your marketing message. And on the other side of this break, Vernon, we're going to come back to everybody. You want to really follow this. We're going to come back to wrapping up this sales message from all the 6 steps, and also going through the 6 steps of product market fit. Okay, so we'll talk about it on the other side.
All right, welcome back.
Thank you very much to our pilot. We'd like to thank you, Bernard, to our to pilot Bernard. As he gets us, as he takes us through the flight of the show. Let's tune in and let's finish. Let's get through the point of 6 steps. There are 6 part components of a sales message, and it's given to you in this order. The reason is you want to get somebody really leading. Now, in chapter 3 of Dale Carnegie's book, How to Influence People, he says, speak to people from their interests. Speaking to people about what you're interested in does not get them, it does not capture their attention. Speak to them about what they're interested in, what moves them. First, you have to extract what really emotionally moves them, not what they say, what they're really feeling inside. Okay. And then attach you and then start your messaging from there. Because if you start with what they're feeling, you have got their attention. If you start with what you're doing and say, this, but and that's why what's it, medical adverts, you've noticed they always start with the sickness. Are you struggling to sleep? They'll ask you questions like that. Have you struggled with weight loss? Have you struggled? They always talk about your struggle first, then they talk the story, because they're so effective at this. They are the most effective. So everybody always has to start with the pain of the person you are dealing with, not the features. Start with the pain. I know you're rushing to make the sale, but remember, you need to get this person to, you need to convince them. So the first step I think you have to look at is the problem. Identify the problem that someone is facing. In other words, what situation are they going through? Okay, what pain, what is the complication in their life that is causing this? So are they trying to do something and it's complicated? Okay, so I will tell you that somebody will come to me and say, Nyumba, I'm trying to make an investment. Okay, I've been trying to invest, but it's so difficult. So that's the problem. Or I'm trying to invest, but I don't understand these things. So it's either confusing or the process is complicated. That's what I understand from the people I'm dealing with. Okay. And by the way, you shouldn't have to lie in any of this. Be honest. Okay. So now the issue is the problem that somebody's facing. So start there. The second thing is the pain that they're feeling. So start with the problem that they're facing and then talk about the pain that they're feeling. So how is this making you feel? I've been trying to invest, and every single time I keep failing to, I feel more anxious that my retirement is not going to be good. Okay, I'm trying to build wealth because I'm worried about this day in the future. So what is the pain? There's an emotion. If you in Never Split the Difference, Chris Voss actually says, when you speak a person's emotions, you make them connect with you because they feel like they're not crazy anymore. You're actually helping them. They feel because the way we're feeling, sometimes we're worried we're the only person who's feeling like this because the rest of the world seems so calm going along their way. But I'm the one who's actually in turmoil internally. So if you can voice what I'm feeling, okay? So tell me what I'm facing and then voice what I'm feeling, and you've got my attention. So it's like sticking your hand on a person's wound. They'll feel it. You've got their attention. Okay, I know it sounds harsh, but you've got their attention. Then you offer them a general prescription, not your product yet. This is the mistake. Don't rush to your product. They don't trust you yet. They don't know you. So the first thing is just offer them a general prescription. Look, if you're confused about the market, what you need is an educational platform. Okay, so you need something that can educate you so that you can get started. Or what you need is a game plan, because that game plan is going to help you formulate a strategy. I haven't told you what I'm offering you. I'm just telling you what you need in general. So be general about what they need. Okay, so that they don't feel like you're trying to sell them something. They feel like you're still communicating. So at this point, you're like a doctor. A doctor knows the problem you've gone through, the pain, and they'll give you a general prescription. Look, you're going to need some headache tablets. They haven't told you which brand to buy. They've just told you which headache tablets. And we trust our doctors, okay, because we trust their objectivity. So at this point, you have to be objective while being empathetic. So this is the empathetic step forward of learning how to sell to a person. At this point, you've captured their attention, okay? So I always tell people, we hear with our ears, but we listen with our soul. And the pain that sits in our soul. That's why when two people can be reading the same thing, that's why certain things jump out at people. Because there's a pain in my soul, that word just hit. Okay? So what I've just read or I've just heard, there's a pain, there's a situation that's worrying me. That's why when I see something, you see something, we'll react differently because I'm dealing with different pains than you are. So once you speak to a person's pain and you've described their problem effectively, they feel like, oh yes, well done. You've described their pain. Okay, that's why listening at first, I told you to write down those 5 questions. That's why that works. And then you've given them a general prescription. Now you've gotten their attention. Because the next question is, okay, so you told me to get headache pills, or you told me to go and get an educate. Now, which one should I get? When they ask you that question, you're ready to now the second part. It's time to now deliver your knockout punch. Pivot and explain to them your mission. Okay. What is it about? What mission are you on? What problem are you trying to solve? What impact are you trying to make? Okay. I tell people all the time, I want to see Zambia have 1 million millionaires by the year 2050. As an aspirational mission. They always look at me like, wow, okay, that's something. And it's true. I do believe that. I think the more millionaires this country has, the better tax base it will have, the more it will grow, the less will depend on foreign investment. I believe in this, that the more internal wealth we have, and it should be something you truly, truly believe in. Phil Knight says in Shoe Dog, he struggled to sell insurance because he didn't believe in it, but he could sell shoes very well because he believed in it. Okay, so sell what you believe in. Okay, so if you believe in it, express your belief that why you believe in this solution. What is your mission? What impact do you want to have? I'm on a mission to help X. Now, what is your product supposed to do? Are you here to infuse flavor? I remember there was a lady who was selling chili once. I said, what do you want this chili to do? She said, I want the experience of eating to be lively. I want everyone to experience this. I said, tell them that. Okay, tell them that in your messaging. Then the fifth step is now position yourself. Position yourself by telling someone, look, I know you've probably tried this before. You've probably tried this way, and I know you feel scared about it. So you're now explaining to them. So basically, you're saying maybe you've tried the alternative solution that they've tried, but this is a problem that you faced when you tried it. So maybe you tried to go to a bond auction on your own, and you faced quite a bit more of a confusing process. Okay. So that is your messaging that you're talking about. So when you're on a phone call, you take them through this. This is your script that you need to follow almost at the beginning. Eventually, it'll become natural for you. You can freestyle. At the beginning, try and follow it a bit. Don't be robotic, people. Don't be sorry, let me just turn to page. No. Like actually sell to them. And then the other thing that you need to start looking at is finally, this is when once you've positioned, you've pivoted, you've told them your mission. So now they feel like, okay, you're in this for a bit more than money. I understand you're here for money, but you're in this for a bit more than money. You've positioned why you're better than every other alternative solution I've tried. Now you can introduce your product. And you start by introducing the perks of your product. Then you describe the features as how the perks are reached. Because nobody's interested in the features of your product. No one is interested. Okay, they're interested in how those features will translate into the relief of their pain. Okay, that's what they're looking for. So talk about how the specific parts of your product translate into the relief of pain for your customer. That's how you then start to align it. At this point, then you can make the sales pitch and the offer, where you now start talking about how much the price is. Make sure you speak about value more than price. So that's one of the other things that we need to try and focus on. So this is kind of a little basic thing. Take it down, people. Something that you want to try and focus. Alex Katoni's 6 points of persuasive advertising. She's really good at this part. The point I also wanted to maybe make whenever you're trying to pick a market to penetrate into, and this is just one point I'll give you. I'll talk about product market fit at another point. Is when you're trying to penetrate an industry, look for the smallest customers that is where you find the most underserved needs. So usually you'll find the retail customers are the ones who are not taken care of the most. People who don't have the most money but have the demand for this, those are the ones who are not taken care of. Jeff Bezos started by dealing with independent authors. Okay, when he was selling books on Amazon, because independent authors were mistreated because they didn't have a publishing house, and they would try and get on the shelf of a bookstore, and the bookstore would mistreat them. So they were the smallest and underserved needs. Large incumbents have a tendency of ignoring the needs of small customers because they view them as unprofitable. So look for small, easy to access, high volume customers. They have been so disgruntled and so underserved for so long that the moment someone pays attention to them and listens to them, okay, they actually, firstly, they feel validated when that happens. And at that point, you're likely to make a sale. Now, I'm not saying you go and prey on people. This is not predator tactics, people. We're not saying be predators. I'm just saying once you can learn to start looking at who to start selling to, then we can start getting into a 6-step process. And this is just a preview. Next week, this is the process we'll be looking at. I'm going to take you through these 6 steps of how to then cycle out a product so that eventually you can start to learn to refine it. I call it the 6S: customer fulfillment, product C, sign up, start, stay, spend, and sell. It teaches you how to get through that product, that process. If you can do that, that'll actually help you. So my final thoughts, Vernon, are this. Whenever we're starting, is this. And to anybody who's been taking notes, please give me the note-taking emoji. Thank you there, Blackchain Joe. But for anyone there, and the name Blackchain, I'm down for that name because it's blockchain and it's Blackchain. Anyway, the final thoughts I have, Vernon, for today are: start small, think big. Okay, don't have a small vision, but be willing to start in a small place. That's why I said look for the small customers who are underserved. That's a starting point. Jeff Bezos started with independent booksellers. Is he still dealing with only independent booksellers 20 years later, 30 years later? No. He's knocked out the biggest retailers in the world. So independent booksellers, Jeff Bezos has worked with that. So you need to try and have a starting point with a big vision and grow into that vision. So it starts small, think big, grow fast, or learn fast. You learn fast so you can grow fast. And do not look to be perfect. Okay? Perfect is a prison. Now, that is the problem. Progress is freedom. Perfection is imprisonment. Okay? So, Vernon, I don't know if you have any last thoughts before we sign out today.
I think we're set for today.
Do you feel convicted to go out there and make a sale?
I like that question.
Hmm?
After
You
they've
must be
given you a
convicted.
whole 2 hours speech and they expect you to go make sales.
Yeah. Go out there, people. Go forth, sell, multiply. Fill Zambia with your products. Dominate people. That is the Genesis 128 model. To everyone, I wish you I wish you a wonderful day, Brother Vernon. I'll see you tomorrow for Futuristic Friday.
Have a good one.
Cheers.